today's episode of the Zaner Ag Hedge MarketCast. We're joined by Ted Seifried, Chief Market Strategist here at Zaner. Ted, we saw corn go down, touch a new contract low today. Did we close there?
We closed right on our lows. So, not a good day in corn, not a good close in corn. After a 3-day weekend, we know we're primed for a bigger move, and it's usually dependent on weather. And this Labor Day holiday weekend, very much we were watching weather very closely because with the corn crop being well behind in a lot of areas, we are nervous about frost. But when we come in after a 3-day weekend and see that some of the forecast models are a little bit less cold in the 8 to 14 day outlook, we get a little less concerned about the frost. So then we're able to kind of come down and push into those new contract lows. Now we do have a gap on a continuous chart that's about 4.5 cents below us yet. That could be the downside target that we are aiming for. But keep in mind, this is the sort of time frame where these markets like to find bottoms. Corn and soybeans in particular will a lot of times find a bottom at the end of August into the early part of September, and stage a bit of a harvest rally from here.
Well, and it's been looking like, especially on the December chart, like we've been building a bottom in here that our descents have been getting more and more gradual every single day, even though they're almost still always descents.
Yeah. Well, when you make new contract lows, it's hard to say that we've got a bottom in. There's just nothing on the chart that says we have a bottom in now. What I would say is that keep an eye on the calendar, because this is the seasonal time frame where we like to do these things. And this year would make a lot of sense because, we know we have had issues with this crop. We also know that there's a lot of corn out there that is a long way from maturity. So there's a lot of frost risk out there. Even on a normal frost, I think that will really hurt a lot of the corn in South Dakota, in particular, for example.
Yeah.
I think this is a year where we will get more and more concerned about the frost, regardless of when it happens, as long as it's not like mid-October. But if we have some cooler temperatures in the forecast, we'll start to build some premium back in again. I also think that, maybe the USDA's numbers that we saw on the August report are probably going to be the biggest production numbers that we see, both for corn and soybeans. Looking at how soybeans traded here today on Tuesday, we were under pretty significant amount of pressure early, and then as corn and wheat continued to get heavy throughout the day, soybeans found some footing and started to come back up. I think that's pretty optimistic. That looks pretty good to me. And I've been saying it for a little while now. I really do feel like the soybeans are going to be the story here this fall. And if we're going to see a recovery in corn and wheat, I think it comes from a rally in the soybeans. And you're starting to see hints of that. So, I'm optimistic on soybeans. I think that we could get a potentially bullish surprise from the USDA next Thursday when we get the WASDE report, the September WASDE report. If it doesn't happen on that report, I feel like it's going to happen at some time, though, because from what I saw on Crop Tour and everything I was hearing, I was on the West, everything that I was hearing out on the East is pretty similar to what I was seeing on the West. And that is much, much lower pod counts. And while that doesn't necessarily mean a sharp drop in yield, just the fact that we're so late and the way we're finishing this crop off, I really think that USDA's 48.5 is much too high for a national average yield in soybeans. And I've got the soybean balance sheet coming down to, or carryover number coming down below numbers we've seen for the last couple of years at least.
Well, that's the thing, Ted. And you mentioned we might see a bit of a bullish surprise from the USDA. How far do you think the USDA will go in dropping bean yield?
Yeah,
on an August report or September report, whatever month we're in.
Right, exactly right. So that's the question. What are their specific? They use a different model in August than they do, or a different model in September than they do in August, and they use a different model, for final numbers too. So for this particular one, you wonder what that model is going to say. I think they will come down. I'm guessing that they're going to be somewhere 46.5 or 47, down from 48.5
at the final.
No,
you think
September
in September?
Report.
Okay,
yeah.
We'll see 2 bushels shaved off.
Bushel and a half to 2 bushels.
Okay.
Is what the numbers I just submitted moments ago. I've got them at the 46.5 for this report. I'm at a 45.5 for national average for a final number.
Gotcha.
So a 2 bushel shave on this report, and again, I don't think there's a lot of dead weight on the demand side. We're already so very pessimistic about our soybean exports, and the crush numbers are going to remain good. I mean, we've got fairly good crush margins. I don't see any reason for that crush number to drop, even if we have a little bit of a tighter supply. So, I think there's a good chance that this soybean report, this soybean balance sheet starts to look a little bit more and more bullish as time goes on, and this September report might be the start of that. And it could be the catalyst for some strength in the soybean market, and therefore grains as a whole could kind of bounce up. And really, I do think corn is also set for a recovery into the end of the year or first couple weeks of the next calendar year. We overshot the mark to the upside in corn back in the spring. Now I think we're in the process of overshooting the mark to the downside in corn, and we got to find a happy medium somewhere.
What are your thoughts on USDA's yield number for corn?
They're currently at a 169.5. I have them coming down just a half a bushel on this report to a 169. But I'm also cutting harvested acreage by 800,000 acres.
And what's driving you to do that? That's the crop tour influence. That's you seeing a crop that's just not going to get turned into grain.
Yes, so that's the thing. I think there's a number of acres, a lot of them in South Dakota, but also northern Illinois, parts of Indiana and Ohio. They're just going to really struggle to make the finish line. And one of two things is going to happen. Either those acres do make grain, and it's a drag on the national average yield, meaning, okay, harvested acreage could be 82 million acres, but if we're going to harvest all of those 82 million acres, I think that national average yield is going to have to drop down below 167.
Okay.
Or those acres don't make grain. We take that out of harvested acreage, but when we do that, that really fortifies the yield number and means that a 169, 169.5, maybe even a 170 is possible. So my overall production number for corn, that's really what matters. Mm-hmm. We can get there in different ways by, like we were talking about, we can either cut out harvested acreage or we cut out yield or whatever. Doesn't matter to me really how we get there, but my production number is just under 13.5 billion, and that's for my final number. For the USDA report, this coming September WASDE report, I'm a little bit above 13.7 just because I don't think they'll be quite that aggressive yet, and we still have a lot to figure out as far as when we get that frost and what makes it and what doesn't. But ultimately, I see it being about a 13.5 billion bushel crop, which is better than what the market was looking at in August. It's better than what I think we're in the process of factoring in right now, but it's not the stories we were talking about back in the spring.
Right.
So for me, the high's in for corn, barring something we don't see right now. But I do see a halfway decent recovery, especially into the end of December, early Jan, that I think gets us back over the $4 mark, especially for the March corn contract. And the earlier the frost, the higher we could go, but I still don't see new highs.
Okay. And so we're looking at those spring highs being the highs in the market. Wheat continued to stay under pressure today, Ted, as you've mentioned earlier. What's any news story there, or just following on the coattails of corn and just everything was a sell today?
Well, yeah, I mean, just wheat just continues to struggle. We have a consistently strong dollar. We are not very competitive on the global market for wheat. Our export sales have been okay, but we've got a lot of supply. There's a lack of any sort of bullish spark happening in the wheat market right now, and globally prices seem to be coming down. In the climate of a higher dollar, that just doesn't work well for us. So, yeah, when you have corn under pressure, wheat under pressure, the two kind of feed on each other. We need some sort of spark, and again, ultimately that spark might be soybeans, but for right now, we just don't have that, so we're just kind of trying to find that bottom.
All right. Well, Ted, for listeners who are wondering, how should they get prepared or get positioned ahead of WASDE's release next Thursday? Anything you'd want to be putting into place right now?
Yeah, it really kind of depends on how you're situated going in. I mean, if you missed out on making a lot of your cash grain sales when we had these better prices, then I don't think there's really a whole lot to do aside from look for a recovery to get more aggressive on sales. And I would include, next year, especially in corn, because it's likely that we're going to end up with a lot of corn acres next year, and significantly more soybean acres next year also, if the weather cooperates. But I would be looking to market, this current crop that we're getting into harvest right now, and I would be very much looking at, December 2020, November 2020, to start moving along there. Now, if you had been aggressive on making sales, back in the spring and into the summer, and you feel pretty darn good about where you've been, then now might not be a terrible time to start re-owning some of those bushels and looking to add on to those previous sales. So really the strategy depends on where you're positioned on your cash position. And again, we work with our guys individually to talk that through and figure that out and then give advice based on that.
So, Ted, if our listeners want to get advice, want to talk this thing through, how can they get in touch with you?
Yeah, you can reach me directly at 312-277-0113. You can also find us on the web at www.zaner, that's ZANER.com. You can also find me on the Twitter. I'm at the Ted Spread.
Fantastic, folks. Check them out if you don't already. And stay tuned. We'll have more Zaner MarketCast coming to you later on this week.